welcome to the Jordan River Financial Education Channel. Here we're on our journey out of financial bondage and into our financial promised land. Today is Thursday, October 16th, and in this video I'm going to discuss my trade in Cameco Corporation, ticker CCJ. Cameco is in the basic materials sector and is in the industrial metals and materials industry group. They're one of the world's largest uranium miners, and they sell their product to nuclear energy generators, as well as providing nuclear reactor maintenance and engineering services. I'll get into the technical analysis of the stock, as well as describe the setup, tell you about my trading plan, and also show you how I've managed this trade so far. But first, the required disclaimer. Family, be accountable for your own financial situation and decisions. Understand that the risks around trading in stocks and options before you trade, and don't trade with the money that you can't afford to lose. And please, please, don't take what you see here as financial advice. Okay, so what I'll do here is we'll start the technical analysis of this stock. What I'm showing here is my chart for the stock Cameco Corp, CCJ. The bottom axis here, or this bottom panel I should say, shows the volume with each bar representing 1 day of trading. And over here on the right it shows you how many shares the stock traded each time. The blue line here is the average. So for instance, on this day, the average was about 4.9 million shares, and but the stock traded well above that. This panel on top shows the trading for each day for the share price of the stock with the price here on the upper right. Other elements of the stock here are the moving average lines. So this blue line right here is the 200-day moving average. This orange line here is the 50-day moving average. The red line here is the 8-day exponential moving average. And the gray line here is the 20-day moving average, with the top lines that are on either side of that being your upper and lower Bollinger Bands. So if you don't understand what I mean by any of these terms with these elements of the stock chart, please let me know by subscribing to the channel and leave a short comment. I'll be happy to create a few videos that are dedicated to showing you how to read charts, and I'll describe what all of these elements mean in detail. But moving forward, I'll assume that you know what I'm talking about when I reference these things, and I'll continue with the stock analysis. So what happened was that the stock traded down to about $35 in early April, and then the stock reversed, starting its uptrend that lasted through the spring into June and almost to the beginning of summer, where it's topped out at around $75 or so. That means the stock almost doubled in that time. It would have been great to have owned this stock during the spring. I didn't. Once we got into late June or so, the stock then traded in a range from about $70 to about $80. And that's what I'm showing here in this box. This box is nothing more than a box. Basically for visual cues to show that this stock was range bound all the way through the rest of the summer and into early September or so. What happened here after that is the stock broke out of that range, started trading a little bit higher afterwards. Okay, so what I'll do is I will zoom in and give you a better idea of what we started seeing here, or what I started seeing here. Again, I did notice that on the 15th, the stock did break out of this range, which is a great sign. It generally indicates that the stock is going to go to higher prices. And then the next day, that breakout was rejected. It was met with a bunch of selling. I then set an alert, and I wanted to see if the stock would come back above the high that this breakout had initially. So that was right around $86.40, something like that. And on the 22nd, or sorry, Friday the 19th rather, that stock did eclipse this high. I got the alert and I decided to go in and buy 100 shares of stock. I bought, again, that price that I was filled at was $86.44. And um, then I decided, oh, good, great, I now have 100 shares of this stock. Um, but I wanted to own more. I generally wanted a position of about maybe 200 shares, but because the stock was not at support when I bought it, there was risk that the stock could come all the way down, and the next level of support was this potentially this 8-day moving average. You can see that after the initial breakout and then the sell-off the next day, sell-off stopped at that 8-day moving average. Subsequently, each day, the stock would trade, but the lowest it would trade would be right out that 8-day moving average. So you generally, the lowest risk you can take is buying the stock at support. And support, 8-day moving average was around $82 or so. Um, I was buying it well above 86, so I did not want to commit all of my money to buying it at that level. So I bought half of my position, and I wanted to wait for a pullback and buy that support a little bit later. So I had an option. I could buy the stock, wait for the stock to pull back, and then buy it at support. That is a definitely viable option. Or, and the way that I chose to do was to sell an option to basically allow me to buy the stock at support. And I did this by selling the $83 put that expired on September 26th. And I was able to sell that put for $1.15 per share. One option being for 100 shares. If the stock closed at or below $83 on Friday the 26th, again, I'd be forced to buy the shares or 100 shares of Cameco at $83. And again, this was fine with me since really that's where I wanted to buy the stock. And it would be right at support. Uh, However, if it closed higher than that $83 on Friday the 26th, that put that I sold would expire worthless, and I'd get to keep the money that I took in for selling that option. Again, being roughly $115. So with the purchase of the stock and the sale of the put, I moved on, and I'm going to show you then what happened afterwards. So we went on through um, Monday the 22nd, 23rd, and we see that the stock is moving up. The 24th, we have a sell-off, but not quite to the level of my put, but pretty close. And we get to Friday the 26th, which is right here. Now, what I'm showing here also are these boxes, and that's just, again, another visual indicator for me so that I can tell how close the stock is to key levels, in this case being my put. On Friday the 26th, the stock closed above $85 or so, so well above the $83 put strike. So this put was not assigned to me, got it, and I got to keep the premium. So, but again, I held the stock. It's a little bit below where I bought it, but again, I wanted to own stock near support. So I decided to go ahead and sell another $83 put, and I was able to do that on Friday the 26th. I was able to sell the $83 put that expired on October 3rd, so the following Friday, and I was able to sell that for $1.35. So again, stock goes up or if it stays flat, I get to keep the $135. And if it closed at or below 83, that put would be assigned to me and I'd be forced to buy the 100 shares at $83. Okay, so on to the next days. That's Monday the 29th, and again, the stock sells off a little lower, but it seems to hold at the 8-day moving average. The next day, the stock sells off, so it violates that 8-day moving average, and stock comes close to that, being a little bit below the $83 put range. Next day, again, in that range, and it looks like if it stays here, I'd be forced to buy the put. Thursday, the 2nd of October, stock closes a bit higher, above that $83 mark. And here comes Friday, the 3rd of October, and it's at this point that the stock closes um, again around $84 or so, and above the $83 put. So I get to keep the premium, not buying any stock, and I make the decision again to assess where is support. Do I still want to buy stock at that level? And I decided that yes, $83 is the appropriate level at this point. I don't trust this 8-day moving average as support anymore as it was violated. More firm support is this 20-day moving average, this gray line here. And as you can see, this was support earlier on, was support during this sell-off here. So I'm more confident in that being support, that price being around $83. So I decided to do it one more time. I sold the $83 put, this one that expires the following Friday, October 10th. Um, Took in that premium because I was able to sell that put for I believe nope, I sold that one for uh, $1.57. So I was able to take in $157 of additional premium on the 10th if the stock doesn't close below $83. And I'll go ahead and show you what happened. I'll go ahead and show you what happened then. So Monday the 6th, stock closed up a little bit, although it traded all the way to the top of the Bollinger Band, but then sold back off. Tuesday, stock was in a very similar range, closed up a little bit. Looks like support at the 8-day exponential moving average, this red line again. Um, Wednesday, the 8th, stock traded in a narrowing range. Again, the lowest it was hit that 8-day moving average again. But as you can see, the width of these Bollinger Bands is starting to decrease, meaning that the stock was becoming less and less volatile, which means that options prices would be cheaper than they were when there was more volatility, so becoming less advantageous for those who sell options like me. Again, stock trade is in an even more narrow range. Price is going slightly higher, but not by too much. And then comes Friday the 10th. This was an eventful day here. The stock opened up right around the same price. It traded up all it traded up all the way to about uh, let's call it 90 almost $92, $91.75, but then sold back off and closed almost right where it opened. So because that closing price didn't change much, again, the volatility is coming in even more. Key point here, though, is that the put at the $83 level expired worthless, so I was able to keep that amount of premium. And again, I'll mention here that although as far as where I was with the trade, I'm right about break even where I bought it. However, because I was able to sell options for these 3 weeks and take in premium, my cost basis was reduced significantly. So at this point, I'm actually quite profitable in this trade, even though the stock has done nothing. Okay, so at this point on Friday, I have a decision to make. I can go ahead and identify support and see if maybe its support has changed. At $83, that's no longer the key support level anymore. Because the price has gone up, the 20-day moving average is now increasing, as is the 8-day moving average. And as I said before, the 20-day moving average is probably more trustworthy support. It's at or around $85 at this point. So I would say that if I really wanted to buy another 100 shares at support, $85 would be about the price I would want to do that. So I can go ahead and sell another put, and this time sell the $85 put and go out another week. And that's not a bad idea. However, at this point, I was into a bunch of other trades that tied up my capital. So I didn't have or didn't want to spend the $8,500 it would take to buy 100 shares if that put were to be assigned to me. And this brings me to an important point. I don't ever sell puts on stock unless I'm willing to own that stock at that level. It can be tempting to sell puts just to bring in the premium, but all that fun ends when the stock goes down and that put is assigned to you. So to me, if I'm going to get assigned, I'm going to want to be happy that instead of having maybe $100 so that week, I now have stock at the price I wanted. So I decided again not to move forward with the put sale here and just continue to hold my stock. And as I did, the following Monday, very eventful. So stock was going up slowly, Bollinger Bands were pinching, and on Monday the stock popped out of this volatility squeeze, as I will call it here, and broke out of the resistance, opened up around $90, traded almost, well above 94, and ended up closing at around $92.10. This is a great development. I love this type of setup. Again, it's called a volatility squeeze, and when it pops out of it to the upside, it's usually a sign that the stock is going higher. So great. I continued to watch the stock, and the next day was a bit of a roller coaster. This is called an outside day, where the range of this day is the low is lower than that day before it, and the high is higher than the day before it. But it ultimately ended with the stock at a higher price. So all good on the 14th, which brings us to Wednesday, the 15th, that being yesterday. The stock traded even higher. It opened up above $95, almost around 96, traded in a range, but ultimately started selling off and closed under $94. During this day, I really got the sense that the stock has some selling involved in it, and I really didn't think that the stock would reach $100. There's no clear resistance, no clear sign that the stock is going to meet selling. But again, I really didn't think that based on this price action, it's going to hit $100. As I mentioned before, with this volatility squeeze, option prices are generally lower, but with this breakout here, the volatility is now high again. So options prices are high. Again, I'm in that situation where I really don't want to go ahead and allocate money for $100 or 100 shares of stock. Again, it would be at a higher price. I mean, I could say that this 8-day moving average is support and maybe sell a put at $90. Didn't want to do that though. But I wanted to take advantage of the high options prices. And one way to do that is instead of selling um, a put and making myself buy stock, I could sell an option to have someone else buy the stock from me. And again, I would like to do that at $100. So what I did on Wednesday the 15th was I sold a $100 call option that expires the following Friday. So that's Friday the 17th. I was able to get a price of 85 cents per share. So again, this would give me about $85 to sell that option. Not a terribly high amount of money from a dollar's perspective, but for an option that expires in only 2 days, it's not bad at all. And with that call strike being above the actual price of the stock, it is out of the money and will expire worthless um, if that comes to pass. If the stock is above that strike price, it will expire with some intrinsic value, so it's more likely to be assigned to me in that case. And I was happy with this. If something were to happen to make that stock go above $100 in 2 days, I would say take it. I'm glad. I won't be greedy. I'll take my premiums, I'll take my profits in the stock, and I will go home. And if I really want to be involved in this stock, I could always buy it back later. So we'll fast forward one more day. This is now today's date, Thursday, and we can see that the stock did open a little bit higher, but was met with selling throughout the day. Stock ended up closing at $91.13. And again, the box I put here is sort of my warning box for the stock, getting it to a range at which I may be assigned an option. But I am pretty convinced now that this was the right thing to do, sort of at the right time even. Unless something really crazy happens tomorrow, this stock won't hit $100. That call option will not be assigned to me. But we shall see. Okay, one last important point about managing this trade. And again, what am I going to do tomorrow? I will hold it. And then I will decide based on price action what I will do. Um, Support here be around $90 if I say that 8-day or moving average support, or I could say that support is around $87 if I believe, which I do, that the 20-day moving average is actually firmer or true support. So what I need is an exit plan for this trade. Um, and what I decided to do is to put a stop loss order at $85.90. So I'll be willing to hold the stock down until it hits the support level again. But if it goes below that, I'll know that I'm wrong. I'll know that this trend is probably over, and I won't want to be involved with the stock. So again, I'll put a stop loss order for $85.90. And for those who aren't aware, stop loss order basically is an order for your broker to sell the stock automatically if your stock hits that price. It's a way to keep your profits or to stop your losses without you having to pay attention to the actual movements of the stock all day long. Okay, so to summarize this trade, I did buy 100 shares of the stock at $86.44, as well as sell 3 puts for anywhere between $114 to $156 of net profit there. Did sell one call that brought in a little less than $85. And then if you take into account also the value of the shares right now, if I were to sell them, I'd bring in over $9,000. And if I had to buy back the call, it has about 7 cents of worth right now. So altogether, the unrealized value of this trade so far is $951, which would be an 11% gain. I also always like to figure out what my worst case scenario is, in which case it would be if the stock hit its stop loss value of $85.90. So all of the other numbers would be the same, and that would result in a still a net profit of $428 or so, which would be a 5% gain. I also like to see what would happen if I just traded the stock and did not sell any of those options. Um, Current value would have a profit of $469, which would be a 5.4% gain. Not bad for a month or so, but this also illustrates um, how valuable trading options around a core position is that we're almost doubling the profit margin right now by selling the options. So finally, what am I going to do next? Well, my plan is to hold the 100 shares until and unless either one, that the stock is called away by assignment of the call, or if the stock trades down and hits my stop loss level of 85.90. Um, if neither of those happen, I'll continue to hold the stock, continue to sell calls and puts weekly to collect those premiums and to reduce the cost basis. And until the stock does something any differently, that is how I'll trade the plan, and I will keep you guys updated with future videos. That does it for this video. I want to thank you all for watching. If you have any questions, any suggestions, would like to see some other stocks analyzed, or just want to continue and see how this trade ends up, I ask you to please subscribe. Leave any of those questions or comments in the appropriate section in this video. And also, I pray that God continues to bless you and keep you. And until next time.